Christian Financial. Thank you so much for watching our podcast, Real Estate Insider, where America goes for funding for the last 20 years. So we're doing our talk with Angelo live. It's 6 p.m. Central. Thank you for watching the channel and the show. We're going to be talking about a lot of stuff. Man, December is here, guys. 2022. It's a very interesting time what's going on right now in the world. So, much as how I predicted, interest rates have come down. In the last 2 weeks, interest rates have dropped and home prices have come down. So we've seen more mortgage applications in the last 2 weeks than I've seen probably all this year. So it's gotten very, very busy right now in the markets. I'm actually very excited because of everything that's happening. A surge of applications, lower interest rates, and it's great because you have a lot of people that are stepping up right now, wanting to buy deals, wanting to get properties, and so I'm really excited about it because there's a lot of people out there right now in the market that are wanting to get loans because interest rates have dropped a whole 1% in the last few weeks, and they're on a downward trend. The 10-year Treasury dropped to as low as 3.5% today. So today, the beginning of the first day of December, and it's encouraging because you're seeing lower rates, lower home prices, and it's good because you're starting to see people come back into the market. So, I think that we're going to stay on this trend and interest rates are going to continue to go lower into 2023. I don't see a recession on the horizon. I think that despite what the Federal Reserve does, the markets are stronger and they're going to be able to control the rates and keep rates lower. I think you're going to see rates in the 5% range. Which is what we saw today. We locked in, several $1 million of business today in the 5% range. So I think that trend is going to persist. And I think that you're going to see, hey, Mr. Biggersworth, thank you so much for watching the show on the channel. Thank you, guys. So I also think that you're going to see home prices kind of normalize. I think we've seen a 10% pullback. Some areas, obviously every market's different. Some areas the prices haven't dropped as much, but overall, on average, about a 10% reduction. So I think it's good because some people are trying to time the market, and I've seen a lot of people, thousands of applicants come in trying to get pre-approved, trying to lock in their rate right now, trying to go on their contract to lock in that deal with a lower price, getting seller concessions, locking the lower interest rate, and getting their deal done. So I think it's awesome, and that's what I had kind of predicted. And if you guys watch the show on the channel, that's what we've been talking about all along. All the programs that we're offering: first lien HELOC, conventional zero down, no doc loans, non-QM. We do construction loans, one-time close, all different types of products. So, we are the source, the hub where America goes for funding, the real deal, an actual lender that talks to you, tries to figure out, solve your situation, try to get you funded, try to get you approved for your loan. We've been doing this for over 20 years. You can call or text Angelo Christian, 832-431-6331. We got all different types of loan products from, hard money, private loans, no doc loans, cash out refinance, HELOCs, lines of credit. We are the lender that really tries to do whatever it takes, to get your loans funded. And that's why we're here. We're problem solvers. We want to get your loans closed. We're great people. We all have families. We're passionate. We want to help you guys to get your loans closed. And that's what we really focus on. So, we're not the lender that just works 9 to 5 or is negative or tries to just take, perfect situations. We work with tough situations, try to get them solved, and come up with solutions. We're a solution-oriented company, and we're committed to helping you guys to get your loans closed. So, anyway, that's what's going on right now in the market in December. Obviously, I don't have a crystal ball. I don't know what's going to happen. I don't know where exactly the direction that we're going with everything, but I would say that I think that hopefully things stay on this trend. Rates go lower. I want to see lower rates. I want to see home prices stay where they're at right now, and more people step up to the plate to get funding. Investors, first-time buyers, consumers, developers, all that stuff. So that's kind of what we're seeing for the setting for December to finish out into the year. So strong finish for the year. On a couple of different fronts, and that's the thing. So I've talked about this in the last few podcasts and the last few videos that I've done, that interest rates have come down, and no matter what the Federal Reserve is doing, even if the Federal Reserve raises rates again in December, it doesn't mean that rates are going to go up, because the markets are controlling what's going to happen. And the markets are showing you that they want lower rates. So, and that's what's happened. We've seen a 1% drop in rates in the last 2 weeks. So, yes, we help a lot of people, self-employed people. So call or text us, 832-431-6331. Love to help you guys out to get the funding. A few different things just changing gears, talking about some different topics for this week. We're going to be producing some videos on this. So talking about buying down your interest rates. What are discount points? What's the difference between discount points and loan origination? A lot of people ask us all the time, can you buy down your interest rate? And I want to talk about this because a lot of people are confused between discount points, loan origination, and can you buy down your rate? So let's just kind of break this down a little bit. So let's say that you get qualified for a loan and the interest rate is 6%. Okay? So if the rate is 6% and you say, look, I want to try to get the rate lower. Okay, you can try to get a lower rate, and it's possible from your lender to get a lower interest rate, but you have to buy down the interest rate. So let's say that you can pay points. You've heard of the word points. So what are points? Points it's a rate buy down. It's called loan discount on your loan estimate. So on the loan estimate, it'll show something called loan discount. And so Uber Dash, can I get a mortgage with a pre-lease agreement? Well, what do you mean, or what are you trying to explain to me what you're trying to do so I can understand better, please? So because it depends on what your situation is. I have to understand better what you're doing. But let's stay on the topic with the buying down the rate. So you got a 6% rate and you want to buy down the interest rate to 5%. So an example, you can pay 2 points. Let's say you're buying a $500,000 home. So you can pay $10,000, which is 2 points, to buy down the rate. So you go from 6% to 5%. Your payment is decreased by $500 a month. But you have to pay a $10,000 fee to the lender to drop the interest rate. So the question is that something that you want to do? You want to pay the $10,000 fee to drop the interest rate? Some people they do, some people they don't. Some people care about their rate and getting a lower interest rate, lower payment. Some people want to hold on to their cash. But you can pay points to lower your interest rate. If you pay 2 points, and I'm not saying that 2 points is going to lower it exactly by 1%. I'm just explaining to you in theory. Okay, in theory how it works. So if you bought down 2 points and it lowered your rate by 1%, it would lower your payment on a $500,000 loan by $500 a month. So that would be a huge savings in monthly payment, but you'd have to pay for it. Now the seller can pay for the points. You can potentially roll them into the loan if the property had the equity. It doesn't mean you have to pay it off, pay it out of your pocket. The other thing is that it is a tax write-off. You can write off 50 points as prepaid interest on your income tax filing, okay, based on your tax bracket. So that's another powerful thing that you can do. So anyway, it's important to know because a lot of people ask us if they can buy points, and you can't buy points. Now, there's a maximum. You can't buy infinite amount of points. You can't buy, for example, you can't buy 20 points. No, there's a maximum. So for conventional loans, usually the max points that you can buy is 3 points. So you might be able to lower the rate a point and a half on the rate, but you're going to have to pay 3 points for it. Now on non-QM loans and private loans, you can pay 5 points or 10 points or whatever and get that rate lower. But for conventional or FHA loans or VA, the max you can usually pay is 3. So just to be mindful of that. So it is possible, and it can make a lot of sense. Now the question is why do you want to do that? It's because a lot of people bring this up to me. Hey Angelo, should I pay the 3 points to buy down the rate because we're in a high rate environment right now and I want to refinance later? So my advice to you is no, it doesn't make sense. If you have the conviction, you have the belief that rates are going to go lower like I do in the next year, then you don't want to pay $15,000 to buy points if you're going to refinance in 6 months. Because we do believe that's what's going to happen. Now, do we know that for sure? No, we don't know that for sure. But if that does happen, then you wasted your money buying the points, because when you buy points, it's with the presumption that you're going to stay in the home and in that loan for a long time, okay? Because if you go to refinance in 3 months, you don't get the money back for the points that you spent. So it doesn't make a lot of sense to buy down those points, to buy down the rate, and then you go refinance in 3 to 6 months because the rate's dropped. Now usually to refinance, you want to see at least a 2% reduction in your interest rate to make it worth your while to go through the process. If you don't see a 2% reduction, then it really doesn't make a lot of sense. Uberdash, want to buy 2 family units, but have tenants. Yes, if you have a 2-unit, we can give you credit, Uberdash, for the other property. So let's say, for example, like in your situation, if one of the units is $2,500 a month rent, we can give you credit for that rental income to go with your income to qualify you for the loan. So for example, if you're buying a $500,000 property and your income is, let's just say, $6,000 a month, but you're buying a 2-unit property and the other unit's paying $2,500 a month, we'll give you credit for that other $2,500 a month to help you to qualify for the loan and your income. So anytime you buy a multifamily, duplex, triplex, or fourplex, the extra income goes to your income to help you to qualify. So that's a very powerful thing. So I want to make sure you understand that, because it will help you to lower your debt ratio and help you to qualify for the loan. So you guys, make sure, does everyone get that, what I said? So you buy multifamily, the extra income helps you to qualify for the loan. So and we have a lot of customers that do that. A ton of our clients will buy multifamily because they want the rental. We have a lot of our clients that will do California add ADUs, additional dwelling unit, garage conversions. They're doing whatever they can to add extra income to their bottom line, to boost their rental income. We've seen so many customers this year lease out their, convert their garages into living quarters, add barn dominiums, tiny homes to their backyard, the ADUs, whatever they can to. Basically, what we've seen is that people are maxing out their land with living quarters to add more rental income to boost up their revenue. If they can lease out a tiny home in their backyard for $2,000 a month, they'll do that to bring extra income in, and that's up to you. If you're willing to do that and you want to do that, I think it's not a bad idea. It's really just based on to each their own. If you're willing and wanting to do that, if you want to do it and you're interested in doing it, we have no problem to do that. So, Josh, loan options for a secure loan. Loan options for a secured loan. What exactly are you trying to do, Josh? I mean, I want to make sure I understand what your question is. So, are you trying to get a real estate loan? Because it depends on what can disable income or Section 8. Yes, you can use disability and Section 8 income. Yes. And okay, now what you're asking about a home equity loan. But what are you asking, Josh? I want to make sure I understand. See, I got to make sure I understand what your question is. Can you break down your question, because I want to make sure that I get it, because I don't want to miss what you're asking me. And just repost that, please, Josh, because I want to make sure that I answer that the right way. Just send that back up there. If you guys have any a lower monthly payment. Are you trying to refinance a property? Is that what you're trying to do? I gotta, and if you guys have, if anyone has any questions, you guys can post the questions here and I'll answer them. I'm happy to answer those for you guys. So it's an open forum. You can ask me questions. We can help you guys with your loan situations. Josh, I'm trying to follow you on that. Hey, what's up? Can you finance a multifamily and then finance a single family home in the space of 3 months? Well, you could definitely. I own a full home, full equity. I got a quote from your company, but have low credit. Okay. Well, Josh, I mean, we have asset-based loans too. And so if you have a low credit score, we could do an asset-based loan, which is just based off of the property and not based off of your credit. And so we'll typically, if it's a cash out refinance, we'll go to, 50 to 70% of the value. Oh, okay. No, that's not bad, man. That's a good deal. $800 a month for $79,000, and then what I would do if I was you, I would take that money and either I don't know what your plan is, either to flip the property or invest into something else or fix your credit. But I mean, here's the thing, asset-based loans. I mean, you're going to pay higher interest rates because it's non-recourse. It means there's not against your credit; it's against the property. The other thing too is that on those asset-based loans, there's usually 6 months of no payments. So you're not going to have to make your first payment for 6 months out into the future. That's fine. You might not even be on that loan for 6 months or a year, man. The thing is that you can't sweat stuff like that. You gotta have a strategy and a plan. You might not even be on that loan for 6 months or a year, and you might refinance and go to something else. You got to think about the bigger picture and have a plan about what you're doing. If that money helps you to accomplish your goal, help you to get funded, then you can move on to a different loan. Yes, I agree. Hey Charles, what's up, man? There are construction loans. Yes, we specialize in construction loans. So we have a lot of construction loans that we specialize in. We do all different types of construction. I mean, that's really what our specialty is. Ground up construction, a one-time close, Jumbo Construction, FHA, VA. Hey Foxy, what's going on? So, but the other question about the multifamily, I think that somebody was asking me earlier. So, on the multifamily, with the 3-unit and a 1-unit, so you can definitely buy a single, so you can get multifamily financing. So remember, residential multifamily, you can buy up to 4 units, okay? And if you go past 4 units, you go to 5 units, it's considered commercial. So I just want to make sure that, I think there was a question earlier about the multifamily. Yes, how did you know those were Cuban cigars? Well, you must be pretty sharp. You can tell that just by watching the video. Okay. So do you know what that is? You can probably see what that is in the yeah, you must be pretty good. It's my only, I don't know, I've had New World cigars and I've had Cuban, and I love Cuban cigars. I'm sorry for anyone that likes Dominican or Nicaraguan or Honduras. And I love those countries. I think Cuba has figured out the cigar making business. So, you know, I really love the tobacco from over there. I think it's just, I mean, I've had them all, but yeah, I prefer Cuban cigars. So I'm not, and again, I'm not biased, but I've tried them all and I prefer Cuban cigars. So, you know, if you get a real Cuban, I think it's worth it. But anyway, so the thing is that on multifamily, going back to the question earlier, we can fund multifamily, and you can be, one of the units can be your primary residence, and then you can rent out the other units. And there's a benefit to doing that, like we talked about earlier. You can get credit for the rental income on the other properties. So let's say you buy a 4-unit property, and you know you live in one of the units. The other 3 units are giving you, let's just say, $2,000 a month each. You get credit for that rental income. Okay, so I don't know if that answers your question. Someone asked a question earlier about the multifamily and the rental properties, but yes, you can definitely purchase multifamily. You can do it with FHA, you could do it with self-employed no documentation loans, you can do it with conventional loans. There's a lot of different loan programs that you can do with. The key thing is just finding the right properties, because sometimes it's difficult to find the right properties. But if you find the right property, basically you have your tenants paying the loan for you. You know, if you're leasing out, you know, $4,000 or $5,000, $6,000 a month rent, then you know you don't really have to. I mean, they're covering the mortgage for you. So it makes a lot of sense to be able to do that. So we specialize in multifamily loans. We do all different types of multifamily deals. So, you know, we want to be able to help you guys. You know, you can call or text us. We're open 7 days a week. We do all kinds of loans: FHA, VA, conventional, hard money, private, no doc loans. You know, and you know, the thing is that, you know, we want to help you guys the best that we can to get you the funding. And we do a lot of ground up construction. Like one of the guys was asking earlier about construction loans. We do a lot of construction loans. That's what's one of our favorite things. If you own the land, if next year a crash, that's a good question. I mean, personally, I don't think we're going to crash next year, but if we did crash, I think states where the property values were extremely inflated. See, you have to think about, why would we have a crash? I mean, is it justified to have a crash? there's a difference between a pullback, you know, there's a difference between losing 10 pounds and having to lose 100 pounds. There's a difference between, going bankrupt and losing $10,000. So why do we have to have a crash? What's going to be the cause of it? And I'm not arguing with you. I just want to post that question to think, are we there? And I don't know if we are. We may be, but the economic indicators don't really show me that we're going to have a crash. There hasn't been a bubble like in the 2008 where it was absolutely insane. But let's say that we did have a crash. What states would get affected? States where you have extremely inflated property values, Washington State, New York State, California. I think Texas is still very stable. Florida is very stable. The Carolinas are very stable. Georgia is still very stable. Yeah. But a lot of that overspending, I haven't seen any overbidding. And it is a good time to buy. A lot of that overbid, I haven't seen any overbidding in the last 6 months. And we see hundreds of deals a day. I haven't seen anyone over. I've seen more price reductions and more seller concessions than I've seen more of that in the last 6 months. The APRs have dropped too. That's another good thing. So I've seen rates today as low as 5.5%, and a month ago rates were as high as 7.5%. Rates have gone down. So you're seeing lower rates. I haven't seen since probably the beginning of 2022, the first quarter, anyone paying over list price. After March, I haven't seen it. So I don't know what market you're looking at, but I haven't seen anybody paying over list price right now. So if they are, I wouldn't take them too seriously. I don't know why anyone would pay over list price right now for a property. It's an opportunity right now for you to buy a deal, get something for yourself. If you find a good property, see if you can negotiate, see if you can get the seller to help you to pay closing costs. But now is a good time to lock in your rate where rates are low. I hope they go lower. And if they do, you should definitely take advantage of it. So I think it's a good time, good opportunity. And we do all different types of loan programs. So I'm sure the price will be higher in Texas next year. Possibly. You just don't know, man. It's very tough to gauge about what's going to happen. What I would say is that if you see a great opportunity, go for it. I have like a lot of investor, most of our clients are investors, and if they find great deals, they don't care. They're buying them up if they see a great deal. If you find a great deal, you got to go for it. So anyway, I'm glad you guys watched the show on the channel. I hope that you get great value. We produce a ton of great content on our YouTube channel. We do Monday, Wednesday, Friday. We do videos that we roll out. You can check us out on Google, Angelo Christian Mortgage. We've got a ton of great Google reviews. Look us up. We are the real deal. We're legit. You go to my website, Official Angelo Christian, our Instagram, Official Angelo Christian. Thank you guys for watching. I hope you got some great value tonight. So enjoy life, enjoy the holidays. We're getting ready to roll into Christmas with your family, your loved ones. Spend time with them. Life is short. Enjoy it. Make the most of it. I can help you to add value to your life. Thank you guys. Enjoy it with your family. If you get a chance, get a good cigar. Yes, you guys. If you get a good one right there, enjoy a good. If you like cigars, or if you want get a cheers to everybody. Take care. Thank you guys for watching the show and the channel. So every Thursday we do the talk with Angelo. And I hope you all got some great content, some great value. We'll be back again next Thursday, 6 p.m. And you guys can always ask me any questions that you want. It's an open forum. Don't be bashful or shy to ask questions. We're here to answer those for you. We consider ourselves the real deal. There's no hiding. There's no BS. It's the real thing. So appreciate all you guys. We'll see y'all next week. Take care. We love you. We'll be back again next week. Take care. Peace out.